All right, roundtable. Well, this time around we have a question for Trading Tuesdays. And the question is, Mac, would you please explain the significance of the controlling high and the controlling low? So first thing, please get into a coaching session. We spend most of the hour on this very subject and all of what it means. Now, the controlling high, I've also called them logical points, serve multiple purposes. So let me, this is a US dollar Swiss, highly zoomed in, so let me zoom back out. Okay, so we're looking at many moons of information, right? So if I go back here, this is April of this year, all the way to the most recent date over here in September. As traders, our job is not to guess where the market is going to go. And I got to tell you, if you're using a MACD, if you're using stochastics, if you're using any sort of indicator to make your decision to trade, you are simply guessing about the reversal in the market. Now, what do I mean by that? Am I somehow saying that we've discovered a way to predict with 100% accuracy? No. First of all, percentages are a fool's game. Rookie traders love to ask, hey Mac, how profitable are you? What they mean is, how many times out of 100 do you win? And everybody wants to, have an 85 or 90 or 100% system. I got to tell you, I've seen guys who have 80% accuracy or 80% wins on their trading system, and they are a hair's breadth away from losing money. And I know guys that win 85% of the time and they still lose money. So there's no magic in having an 85% system. I only belabor the point. I'm only beating the dead horse, because what we're not talking about here is somehow trying to improve your win-loss ratio. The controlling high is designed to get us thinking in the proper direction. So let's go over how it works. When we look at this market, we have, of course, lows and we have highs, right? We see this low here. We see this low here and this low here. The question is, when do you know that that's a low? If you'll pardon the rhyme. We know that that's a low when the market trades over a prior high. Now this brings in an interesting question. What about this high and this high? Right? We can kind of look at that and see we have two highs in the market. We'll call this a minor high here in a minute. But what you want to do is move to the left. So if you see a low and you're trying to decide, well, is that a low? So this day goes by, this one, this one, this one, this one. You're thinking, all right, well, is that a low? Go to the left and find the highest high, which happens to be right here. I'll draw a line. And then know that we do not confirm this as a low until price breaks above this high, which actually happens right there. Now, if you want to be really conservative about this, you wait for a close. If you want to be more aggressive, you wait for the market to simply trade above it. There is no right answer. This endless quest to figure out how to be right in the market is just that, an endless quest. You are never going to figure out how to be right in the market. So let's talk about the concept here. The concept is this: the only thing that will keep price down is selling. Now, there's no magic in it. It's not like some kind of guarantee, but I do know for some reason, this rally was stopped when price got to these highs here around 97.20. What that means, when you really understand how the market works, not how, some guy on YouTube says it works, not how I say it works, but just how it works, then what you'll know is the traders who sold over here will sell again if they still believe that they should. So what we're saying is what caused the market to move down here is continued selling. If price is able to move all the way back up past this prior high, then something has changed. Obviously, those sellers are no longer willing to sell. Now, why is all that important? It's important because these stupid squiggly lines we put on the chart do not cause price to move anywhere. I don't care what your MACD says. That's not why price moves. Price moves because there are more buyers or there are more sellers. Period. End of story. Now, however, some people make the decision to buy or sell based on a MACD or a stochastic or the weakness of their bladder or the throwing sticks into a pot. Who knows? But if those people don't put their money in play, the market's not going to go anywhere. So see, we're not trying to dissect the reasons why people buy and sell. That is just madness. Who knows why people buy and sell? I do know that the way big commercial traders operate is that if they believe strongly enough in their position to put their money at risk and sell, they'll do it again if price gets back up to that same level and whatever made them decide to sell is still valid. And remember, we don't care what retail traders do. I mean, I hate to break it to you, but there aren't enough of us to make a dent in the market. The markets are moved by big commercial firms, big banks, big hedge funds. They rule the roost because they simply have more money. So the controlling high happens over here. Once we have confirmed, and I do this backwards every time. The controlling low is confirmed once price breaks over the prior high. Now, why is that? Well, whenever we see a low, what that's telling us is that buyers came into the market, pure and simple. Buyers came in, and it's not at this exact price, but it's down here somewhere, because again, when you understand how the market works, you know that the commercial traders don't just all pile in at the same price. They have a range of prices. They're going to buy a little bit over here. They're going to buy a little bit over here. They're going to buy even more down there. Okay, so they stage in their purchases, but we, for shorthand, will look at it and put a zone, something like that. Say, okay, that's the zone where we know that buyers came in because we see that that's where the lows are. Now, of course, we know that they came in a little bit higher. Sorry, let me back up. When we get a confirmed high, when we get a confirmed low, all that does is it gives us the ability now to have confidence when we put in a trend line like that. Okay? Now, trend lines aren't magic. There's no mojo in these things. All this represents is a rate of return or return on investment. Every investment has a price and a time piece or component. Price and time. In other words, how much money do you make? How fast? A trend line represents the acceptable rate of return. So if price gets too far away from that rate of return, traders will sell. Why? Because they got the price they wanted, and they got it faster than they expected. Now again, if everything is still in place that caused them to buy back here, that caused them to buy back here, if it's still in place over here, guess what they're going to say? Hey, you know what? Let's buy again. The controlling low is what puts this line in place and makes it significant when price breaks through it. Because now what the traders are saying is, you know what? We don't think that this rate of return is going to continue, so we're not going to buy it again. I mean, you have to realize professional traders buy and sell because they think they're going to make money. They don't just sit down at their desk for the most part and say, you know what? I think I'm going to buy today. In other words, they don't trade like retail traders. Generally speaking, they have a plan, they have a strategy, and they execute that strategy. Controlling high, controlling low is a way for us to keep in mind which one actually matters at the present time. It helps us to develop our strategy, and it keeps us in line.